Inside China's $18 trillion economy, how it got so big. China has experienced a remarkable economic transformation over the past few decades, propelling itself from a relatively poor country to the second largest economy in the world. Today, we'll be taking a closer look at how China's economy became so massive, examining the policies, strategies, and cultural factors that have contributed to its incredible growth. From the rise of manufacturing to the explosion of e-commerce, we'll be exploring the key drivers behind China's economic success and what the future holds for this economic powerhouse. Join us on this fascinating journey into the heart of China's economy and discover how this emerging superpower is reshaping the global economic landscape. The International Monetary Fund's economic research on current concern is being made accessible to a large audience of non-specialists via the Economic Concerns series. IMF working papers, technical papers created by fund staff members and visiting experts, as well as research papers on policy serve as the bulk of the series' primary sources. Editing and rewriting in part are used to make this information more readable for a broad audience. This essay incorporates information from the IMF working paper 96-75, Why is China Growing So Fast? By Zuliu Hu and Mohsin S. Khan of the IMF Research Department. The current version was created by Rosalind Coleman. Why is China expanding so quickly? After years of state ownership of all productive assets, China's government began a significant program of economic reform in 1978. It supported the creation of rural companies and private firms, liberalized international trade and investment, eased state control over certain pricing, and made investments in industrial production and the training of its workers in an attempt to reawaken a slumbered economic behemoth. Nearly all reports indicate that the plan has worked very well. Before 1978, China saw yearly growth of 6%, with some difficult ups and downs along the way. But after 1978, China experienced an average real growth of more than 9% annually, with fewer and less difficult ups and downs. The economy expanded by more than 13% over several peak years. In the last 15 years, per capita income has almost tripled. And some researchers even forecast that the Chinese economy would surpass that of the United States in approximately 20 years. Such development is quite favorable compared to the Asian tigers, Hong Kong, Korea, Singapore, and Taiwan province of China, whose average growth rate over the last 15 years was 7 to 8%. An IMF study team recently looked at the factors contributing to China's development to understand why that country has performed so well. They came to an unexpected result. Although capital accumulation, the growth in the nation's stock of capital assets such as new factories, manufacturing equipment, and communication systems was significant, as with the number of Chinese workers, the economic boom was primarily driven by a sharp, sustained increase in productivity, i.e., higher worker efficiency. Due to the long history of central planning in China and the stringent government control over numerous businesses, economists researching the nation confront challenging theoretical and empirical problems. Furthermore, it is difficult to get statistics on the Chinese economy that is comparable worldwide due to the differences between the national accounting systems employed in China and the majority of Western countries. The neoclassical framework is a popular method for explaining how productive elements like labor and capital interact to produce output. The Chinese gross national product, GNP, component figures, however, have only been maintained since 1978. Between GNP and GSO, China has also generated a series of intermediate outposts known as national income. This data may be used to assess the sources of Chinese economic development once the national income figures have been adjusted, including for indirect company taxes. A large amount of China's recent growth is related to a capital investment that has increased the country's productivity. Prior research has revealed that capital investment has a key influence on economic development. The capital output ratio has scarcely changed, pointing to a limited function for capital. The other factors were gains in productivity, with China's productivity growing at an annual pace of 3.9% from 1979 to 1994 as opposed to 1.1% from 1953 to 1978. Early in the 1990s, capital formation's contribution to output growth dipped below 33%, while productivity's share rose beyond 50%. As factory owners and small producers invested more and more of their company's income into enhancing company performance, the profit incentives seem to have had a further favorable impact on the private capital market, with productivity growth for the Asian tigers averaging around 2%, sometimes even slightly higher throughout the period of 1966 to 1991. China's recent productivity record is extraordinary. Why has productivity increased? Productivity has significantly increased as a result of China's economic reforms, particularly in the rural sector. In China, roughly 4 out of 5 people worked in agriculture before the 1978 reforms. By 1994, just 1 out of 2 still did. Reforms increased property rights in rural regions, which sparked a rush to establish small, non-agricultural companies there. Decollectivization and increased agricultural product pricing also boosted worker productivity and led to more successful family-run farms. The post-1978 reforms also gave business managers more freedom, enabling them to set their own production goals, sell more products at competitive prices on the private market, reward productive employees and fire ineffective ones, and keep a portion of their profits for future investments. Furthermore, by accepting international investment, China's open door policy has strengthened the economic revolution. Nearly $100 billion worth of foreign direct investment entered China in 1994, with yearly inflows rising from less than 1% of total fixed investment in 1979 to 18% in 1994. This foreign funding helps China connect to the global markets, build industries, can generate employment, and facilitate significant technological transfers. Taking a closer look, like any other country's economy, China has certain features that the researcher must take into consideration. First, a lot of academics argue that the recurring political unrest that gripped China before 1978 obscured the country's pre-1978 economic success. These critics contend that it is impossible to compare the economic situations before and after 1978 with any degree of precision, since China's political environment was so unstable. The sub-period of 1958 to 1970, which includes the Great Leap Forward and the Cultural Revolution, was removed from the study to examine this hypothesis. As a consequence, production before 1978 only slightly rose from 1.1 to 1.6%. Second, from 1953 to 1978, China's central planners significantly funded the urban industrial sector while limiting rural to urban migration. Could the fact that this program was abandoned after 1978 explain the robust economic performance? Was it productivity or the sectoral movements that fueled growth? In the end, although these sectoral changes are significant, they do not cancel out the reform's independent increase in productivity. Third, according to some experts, the productivity gain is surely not sustainable if it is a one-time adrenaline boost to the economy. In actuality, the production growth was consistent from 1979 to 1994 and even accelerated from 1990 to 1994. Significant productivity improvements are shown in each sub-period if the post-reform periods are divided into 3 separate stages, each connected with a different set of changes. This suggests that the Chinese were successful in spreading their first productivity increases throughout the economy. The review of the national income statistics for China concluded that the capital stock data was calculated correctly and the input data was free of measurement mistakes. The pre-1978 productivity growth estimate remained the same when the investment data were changed, whilst the post-reform productivity growth rate slightly increased. The results, however, could have been skewed by an over-evaluation of the original capital stock. The data was reanalyzed using more conservative capital stock estimates, although the conclusions are not strongly contested. The post-reform productivity rate has remained unaltered, even if the pre-1978 productivity gains became negative. The analytical results of this research were contrasted with those produced by who had processed the data slightly differently. And it was found that Chinese asset surveys do not yield capital stock estimates compatible with the investment statistics in the national accounts. Even when using conflicting capital stock computations, the productivity data supports increases in productivity as a primary driver of post-1978 development. A possible differential bias might overestimate the growth of the post-reform period in comparison to the pre-reform period was also studied. This issue could develop as a result of the tendency for centrally planned economies to over-report production and underestimate prices. As choosing a suitable deflator for the post-1978 era is challenging due to the piecemeal nature of price reform, The underinflation of nominal production may be a more substantial cause of bias. Even if there is a measuring issue, it is unlikely to significantly change the underlying finding that production increased significantly after 1978. China has a significant global footprint, but other emerging nations may learn from its experience. Growth requires capital investment, but when it's coupled with changes that are focused on the market, productivity may soar. Millions of people in China have successfully made the transition from fields to factories, and the company's open-door policy has encouraged international direct investment. China's exceptional economic success is mostly the result of the company's rapid productivity development, which was sparked by market-oriented reforms in 1978. We'd love to hear your thoughts and opinions on this topic. What impressed you the most about China's economic development? Do you think China can continue its rapid growth? What challenges and opportunities do you see for the Chinese economy in the future? Please share your comments and ideas below. And don't forget to like and subscribe to our channel for more insightful content on economics, technology, and other exciting topics. Thanks for watching.